This is a journal entry for purchasing property, plant, equipment, and intangible assets. This is something that happens in every business. You're going to purchase equipment, you're going to purchase a lot of different things. How do we record these things? And how do we record the things that we can't even touch? So, your corporation purchases $10,000 in additional land, $10,000 in additional land, $8,000 in new buildings, $33,000, $800 in equipment, and $3,700 in intangible assets. All right. Your company pays $55,700 in cash. So what's our debits and credits? Well, the nice thing about this is almost everything you can touch. The intangible assets you can't touch, but you can touch the cash, you can touch the land and the buildings. And so let's start with the land and the buildings. All right. So this is going to be most likely a debit because we're getting lands and building. What we do when we debit that, it's called property, plant, and equipment. All right? And we're getting those. It's an increase. That's coming in, so it's going to be an increase of that in our assets. What's going to be the decrease? Cash. Cash is going to be the decrease. So we're going to have a credit. We know we're going to have a credit of cash. All right? Oh, I should probably move it over a little bit so it follows the form. So cash. All right? So it's going to be a credit of cash. Debit of what we'll call property, plant, and equipment. All right? And then we're going to have something else. Property, plant, and equipment accounts for land, property, buildings, the plant, and the equipment. All right, property, plant, and equipment is an account, and we've just written that account down to summarize it. You could probably write each one as a debit, and you wouldn't get marked off for that, but it's a lot easier just put property, plant, equipment because we're just seeing if you know what the journal entries are. Well, what would property, plant, and equipment be? Well, it'd be $10,000 plus this $8,200 plus the $33,800, which works out to be $52,000, right? So 10,000 plus the 8,200 plus the 33 of the equipment. Forgive me. All right, so 0, 0, 0 here, and then we're going to have and 52. All right, so that's how we get there. So that's how we get to the property, plant, equipment. We add these up and we get to the property, plant, equipment. We're going to have this intangible asset, this intangible asset is going to be written down separately from those because it's a separate type of asset. Intangible assets are assets that we can't touch. These are going to be patents. This might be a trademark. It might be some sort of licensing rights or something like this. And your payment of those things is what's going to be marked as the intangible asset. And the total cash paid for this, we can see if it all lines up. The 52 plus the 3 equals 5, and it lines up with this amount, the 55,700. So the cash of 55,700 here, that's what the journal entry is. And so these are the journal entries required for this problem. So our cash credit, as you can see, goes down here. It decreases our assets by that 55,700. And then we're going to have property, plant, and equipment increasing in assets of property, plant, and equipment, and then also intangible assets. Intangible asset. All right, so the intangible asset is also increasing here. And so that's how these entries show up on your balance sheet. And everything's in balance because our assets went down by the same amount that they went up. And so everything is in order, and we've tracked everything perfectly.